please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
2017 is drawing to a close. FY18 also will draw to a close in a few months. It's an interesting time to get one of the most erudite minds who has been watching the Indian economic scene for a great deal of time. I have with me Geeta Gopinath, Professor of Economics, Harvard University. She's also, in a sense, in the policy space in India because she advises the government of Kerala. But then, of course, her interests span much beyond Kerala, India, and, of course, extends to the world as well. Geeta, it's a pleasure having you with us.
Thanks, Latha.
Well, for starters, you're at the end of 2017, one of the best things that we have got is the revival of global growth. In fact, global trade has also picked up. How do you look at this, both these trends, global trade and global growth? Would it be better in 2018?
I believe so. I think there are some very good signals coming out of most countries in the world. This is the first time that we've had advanced economies and emerging markets all have positive growth rates and have a revival of growth. And so this is quite unique in that sense compared to 2016. And so that looks very good, and trade is also picking up. So I think 2018 should be a good year, at least for the world economy.
Is it as promising as 2003, when it was the start of 4-5 years of good growth, which we may have later regretted, but it was the start of a great cycle?
It could be. I mean, there are a couple of things that seem to work in the favor of the world, which is one, that commodity prices have started going up, and especially for emerging markets that were big commodity exporters, yes. That's a big turnaround, and so that is a plus. And there's a very business-friendly government in the US with the huge new tax cut plan that we know about, and so that's positive too. And the euro area is recovering, and Japan has actually also been growing faster than expected. So there is a lot to expect that this might continue for another few years.
Okay. So what is your opinion on asset prices and the way central banks have dealt with it? Do you think they could be making the same mistake that perhaps was made during the Greenspan era, when central banks concentrated on commodity inflation or price inflation and didn't look at asset inflation? Do you think global central bank tightening is as good as it should be, or should it get tighter?
So certainly, if you look at asset prices around the world, you might think that this is the beginning of another cycle of a credit boom and bust. But what's different about now relative to in the ramp up to 2007 is there is a big difference in the leverage ratios. Okay. So if you talk to central bankers, what they will say is, sure, asset prices have gone, the stock market is booming, but if you look at leverage in the financial institutions, that's way better than it was before the previous crisis. And so that's the reason why they're less concerned about the stock market, which it is true that stock market is something that's much harder to predict where it's headed. As long as you've got the right regulation on the banking side and the right amount of leverage, not just on the banks, but even households and corporates, I think it's in much better shape.
Okay. And therefore, would you expect that there would be just these 3 rate hikes that the dot chart indicated from the Fed? Or do you think that with the tax reform coming in, we should be prepared for more tightening?
So this, I think, is going to be a bit of a wait and watch, right? Most economists don't share the opinion of the Trump administration that growth is going to hit 4% in the US. I mean, the expectation is it's going to be around 2.5%. So if that's the case, there should not be enough of a backsplash to inflation, and the 3 rate hikes would be what it is. Also, I know that the Fed is of the opinion that real interest rates are going to be in the long term around 1%, a little more than that. So they're not really targeting to get towards the 3% rate or a 4% rate.
Okay.
So, but we'll see. Inflation is the one thing that I think that's most uncertain at this point.
Okay. So we shouldn't worry that central bank tightening could get a little serious.
I would not at this point say that here.
Okay. All right. Let me come now to India.
Yeah.
While you have been saying that global growth has been very good and it might continue in 2018 as well, our export growth has not shown that kind of concomitant growth. The November export numbers were better than the previous month, but if you take the year to date, we have seriously underperformed our own trend growth and definitely global trade growth? Would you worry?
So to the extent that I believe some of this is the disruption that's come from GST and before that demonetization, I'm not that worried. I would expect that to turn around in 2018. There certainly has been this issue with exporters who've kind of paid up their taxes and they're waiting for refunds, so there's a liquidity crunch, there could be supply chain disruptions. And so I am not so worried about that. But I think India needs to move away from business as usual with exports. It's kind of had, I was just talking to somebody about this, we've had the same portfolio of products that we sell. We're not growing in the export market the way like Bangladesh is in the textile side, or Vietnam is. We're not a part of the big global supply chain. We're not inserting ourselves as a major exporter in the way that other emerging markets are, and that needs to change.
On demonetization, now we are 12 months even from the end of the demonetization period.
Right.
When you look back, what kind of a cost-benefit analysis will you draw?
I think the analysis will conclude that it was not a good idea and should not have been done. Okay. I don't see this getting picked up anywhere else in the world. Okay. I understand as a signaling device it was very powerful, that this government was seriously going to go after black money and corruption, and I think in that sense it was great as a signaling device. But I think that the alternatives would have been better in terms of, the GST is just a phenomenally better instrument for getting at black money than demonetization was.
Well, just one more question on demonetization. Since you do take interest perhaps in behavioral economics as well, do you think that we may have some kind of ramification? People tending to save in dollars, those who want to cheat the law, do you think that we have opened the door for other devious behavior because this weapon of demo was raised?
I think that was always the risk. There was one thing about the Indian economy was that it's never been dollarized in the way that many other emerging markets have been. So there was certainly a risk that this policy would do it. I don't think you're seeing that much in the numbers. And given that it was fairly short-lived, I don't really expect that to be a big issue going forward.
Oh yes, it was short-lived, and I guess that was the best part of the disruption as well. Time permitting, I'll come back to the export question, but now to GST. We have seen it disrupt even GDP growth in one quarter, but GDP growth came back to about 6.3%. Do you think most of the GDP disruption, GST disruption is over, and that we are going to see quarter upon quarter of better growth? I
expect there could be another quarter of growth being subpar. It's sure that growth has bounced back, but it kind of hit, it fell quite, it didn't fall, but it was growing pretty slowly the previous quarter. So I suspect that there's going to be another quarter of this because I think it's still a bit, the implementation still hasn't smoothed out. But once that happens, I'm a big fan of the GST policy, and I think that this will have a very good consequences for the Indian economy.
Okay. Can you elaborate? How do you think it might benefit? 1 year, in FY19, what can we expect by way of benefit?
I think the biggest thing that GST does is it formalizes the economy. Yes. It's going to make businesses have kind of much more the right amount of paying the right amount of taxes, the right paperwork, which means that you're going to end up with more productive enterprises because they have to find a way to be able to pay these tax bills. That's one. The second thing is this whole amount of transparency right now. Because of this double checking of who's paying and who's receiving the products, it's a fantastic way to ensure tax compliance, and so the combination I think will be very good.
Okay, just one more question on GST. Would you want to see any changes, since you advise one state government and you know it pretty intimately? Are there any changes that you would advise?
I'm seeing a lot of quick reaction to the issues that are being raised. I'm kind of pleased with that. The GST Council seems to be coming up with solutions to it. I think it was excessive to have very high GST rates and have so many slabs. If there's a way they can streamline it and keep it at 18% for a lot of products, I think that would be ideal. And of course, they have to find a way. If you want to formalize the economy and bring the informal sector in. You really just have to make sure that these websites work properly, that people are easily able to access it, that it's not too onerous, the compliance, and those are the kinds of things that would need fixing.
Okay. Well, we have lots more questions on the reason why we are speaking to Geeta, on the major themes for the global economy and the Indian economy in 2018. Those questions after a very quick break. We are back. Welcome back to this special conversation with economist Gita Gopinath on the major themes for the global economy and the Indian economy in 2018. Well, Gita, to that question now, how do you see Indian growth? I mean, for the longest time we thought, well, not longest time, for a better part of the 2000s, we thought 8% was our birthright. We've gone a distance. Do you think 8% is, round the corner?
Oh, I would never say that 8% is around the corner. We seem to be, like you said, undershooting it for a while now. Yeah. I think 6.7% at this point.
Is the forecast for FY18?
That's right. So I think that in that range, kind of between 6.7 and a little over 7% is where I expect growth to be.
Okay.
The policies and reforms that have been undertaken are not it's not like fiscal spending where you kind of see an effect much more quicker. It's going to take a little longer. Things like ease of doing business, GST reforms, bankruptcy reform, all of that are kind of more slow-moving factors. And so, but the important thing to keep in mind is that this is in the right direction.
Okay.
And that's great.
Okay. What do you think the government should do in the budget? You refer to fiscal spending. Would you like to see more of it?
No, I would not like to see more of fiscal spending. I think that India has won a lot of points for being fiscally responsible, and you certainly don't want to squander that.
Okay.
Now, it's always an interesting argument that maybe growth is even higher in the future than it is now, and so we can spend more. I would be a little cautious about that because growth rates in India haven't hit the 8% target at this point. So I would not push for that. I think fiscal conservatism has been good.
Now to come to the theme of 2018 globally, and here it mingles with the domestic theme. How do you see commodity prices? If global growth is as optimistic as you sounded earlier,
right.
Where would crude go?
I think the projections are that crude will go up some more, but nowhere near where it was before it kind of crashed in 2014, because there are many other sources of supply. There are many other low-cost producers. Like the U.S. is now a big producer of oil. So I think and they're able to very quickly increase the supply. So in that sense, I think there's a very natural upper limit on where crude prices can go.
Okay. So if it goes towards 70, how do you look at Indian inflation itself, given the backdrop of even crude straddling $65? Do you think we have troughed out on inflation and we should now start worrying domestically?
For India, the pass-through of crude prices into inflation is very high. So the headline inflation numbers are always going to look worse. The RBI, of course, focuses on on core inflation, which excludes these prices, and so they should keep in mind that monetary policy works with lags, and so in that sense, they certainly don't want to make a policy change right now, and then if crude prices adjust in the future, they're kind of behind the curve. So it is an issue. It is an issue. Now, I know that the RBI also pays a lot of attention to inflation expectations, and their most recent discussions flag the fact that inflation expectations have gone up. It's kind of interesting because what we've seen is that people are things like fuel prices are very salient. Food prices, vegetable prices are very salient to people, and so that can feed into inflation expectations very quickly.
Okay.
But to the extent that the RBI doesn't have much control over those prices, it should maybe kind of take that with a grain of salt about how inflation expectations are responding at this time.
Okay. Well, actually, among the minutes of the meeting of the Monetary Policy Committee, there was a reference, I think by Viral Acharya, that the inflation number could be above the 4% mark, 4.5% mark,
That's right.
for a better part of 2018. If that were the case, should the MPC hike rates or shouldn't it?
I see an argument for not raising rates at this point, for sure. I mean, there is the band of the plus or minus 2 percentage points. And given that growth is still, it's not as if it's growing at 8% at this time, I certainly wouldn't make an argument for raising rates.
Okay. Well, let me come to the other issue that has actually stymied growth in India, and you, in passing, referred to the bankruptcy code. It has been the twin balance sheet issue. Now, do you think that we have seen the worst of that, and we will have one worry less in 2018, or is it a large part of that worry still left with us?
I think a large part of it is still left. They're certainly paying closer attention to it. The recapitalization of banks is a big step in that direction. The bankruptcy reforms are a big step in that direction. But none of this happens overnight. These are very slow-moving variables. And so I don't think the problem has gone away, for sure.
Okay. Actually, speaking about the bankruptcy code, I don't know how much interest you take in that, but the recent ordinance amending that code said that promoters of defaulting companies, especially if the default is over 1 year vintage, they cannot buy back their own assets till they clear the dues. You think it was good to go that far?
So I can see the two arguments, that one in favor and one against. I mean, I like the idea of promoters / shareholders basically, suffering or incurring a real cost for having made bad decisions. And so, in that sense, I favor this policy. Now, I mean, the opposite is, of course, is who's going to value these assets, and maybe it might get undervalued. But at this point, given the recapitalization of banks, I think it's good to send a strong signal that promoters are not going to be safe.
That's right. If it's taxpayer money, then it becomes a moral hazard.
Yeah.
But should we continue to have so much of taxpayer money going into public sector banks? What would you suggest? I mean, the government has repeatedly said the recap money is coming with reforms.
Right.
What should the reform be?
No, I think the reforms have to be to prevent an occurrence of this build-up of non-performing assets in the future. I mean, that's just what it has to be, to prevent, solve the moral hazard problem where people feel like every time they make bad decisions, the government steps in. This doesn't have to be costly. For instance, I mean, in the U.S., a lot of the banks were bailed out too. It turned out to be a winning proposition. So if this is a one-off thing, it could be fine. But you certainly don't want to signal that, that every time you make these bad decisions, the government is going to step in. So reforms that prevent that from happening. And I know that there have been discussions of that in terms of bail-in clauses and etc. that have been discussed.
There is an argument that, we should move towards greater privatization. Is that an answer?
Well, the U.S. had a lot of private banks that failed, so that needed bailouts. So that unfortunately, banks are.
So that's not the answer. Privatizing public sector.
I think I like the idea of privatizing more of Indian banking. The fact that 70% of Indian banking is in the public hand seems excessive. But at the same time, I think what we've learned absolutely from the financial crisis is that without appropriate regulation, I mean, banks just are too big to fail. And so even if you're private, it's almost guaranteed you're going to get bailed out. So that doesn't solve that problem at all.
Okay. Well, let me come to the global situation again, United States in particular. How do you think this tax reform will play out? Do you think a lot of money moves out of other countries into the United States?
I don't think so. I mean, people make a big deal about the U.S. companies bringing money back in. It's not as if there is money sitting in some box somewhere outside the U.S. It's basically sitting with financial institutions. No, it's sitting with this cash that's being supposedly held outside. It's basically sitting in some financial institution in the U.S. The only thing that's not being used is for investment, because that's when they get taxed. Right? So it's not as if we're going to see a big move back. I mean, I know people are concerned about whether the dollar will appreciate by a lot as people.
That was my next question.
No, I just don't. That doesn't seem like a relevant argument. I can see the dollar strengthening for other reasons, but not because people are literally moving cash back, because that cash already is in the U.S. economy for all purposes. It's just not being used for investment, because that's, like I said, when it gets taxed. It's certainly attractive. I mean, the U.S. is stepping up its game in terms of competing for corporate investment. The corporate tax rate at 21% brings it kind of bang where the rest of the OECD is. And so that's a big deal. The whole shift to the territorial system is another big difference that they've made, where you only get tax on income earned in the U.S. but not outside. So those are two big changes. And it should certainly have some effect on attracting investment back into the U.S. I don't think it's going to have a huge effect.
I have two questions from that on how 2018 will play out. Will the dollar get stronger?
I believe it will.
Okay.
That will be. And, you know, it's one thing I tell my students all the time is don't try to predict where the dollar is going. I'm making that mistake here. But given the fiscal spending, given the expansion in the fiscal deficit, you know, increase in the U.S. debt of 1.5 trillion, that, and with the U.S. growing, that should, in my opinion, be associated with a stronger dollar.
Okay. On the other hand, the argument advanced in India, one of the arguments is that with the U.S. cutting tax rates, Indian government should also be competitive and cut rates, corporate tax rates, that is.
Right.
Is that a legit argument?
I don't think I want to respond to competing to the U.S. I can see an argument for having, you know, 25% corporate tax rates in India as kind of good policy. If they can manage at the same time to keep the deficits where they are and not grow debt, I mean, I can see an argument for that.
Okay. All right. Lower taxes, but not necessarily to compete with the U.S.,
No.
you think?
No.
Okay. All right. Finally, Geeta, just a few more guesses about how things might pan out in India. What kind of a growth would you give for FY19?
It's 7% around.
Okay.
In that
straddling
ballpark.
that figure.
Yeah.
Okay. And inflation?
Inflation, I think, could go. The headline inflation could go up to between 4 and 5%.
Thank you very much, Geeta Gopinath, for joining us. And I think a lot of our viewers are going to like the fact that Geeta is not advising a rate hike just yet because growth still needs some help, and the RBI should have a little more tolerance to 4% plus or minus 2%. That plus 2 should be used. I'm sure that's music to the ears of a lot of you who are watching this interview. Thanks for watching.